good for you. So MMP is a name that you may not recognize. MMP is the 5th largest accounting firm in Canada. Very large out west, and made the trip to the East Coast on January 1st, 2017. We merged with them. We were formerly White Burgess Langelinman, or WBLI. I guess I was really dating myself there, and merged with them. And it's been a very successful and pleasing time, because the resources and the that are available across the country for various different niches and businesses and programs and consulting has just been phenomenal. So that's who we are. And moving right along, let's see, the next is the picture, the nice map. Anyway, we'll move on from there. So what we're going to do today, we're going to talk quickly about the tax filing and payment deadlines. And okay, good. And then we're going to listen to Wanda talk about the temporary wage subsidy, the Canada Emergency Wage Subsidy, and so on. And at the end of it, we'll come back. We'll talk about some of the other items out there, other possibilities here in Nova Scotia available to you. And then we'll talk briefly about some tax planning ideas that you may want to take into effect. So moving right along, tax payments and deadlines. So the deadlines, as you may or may not know, personal tax returns were originally due April 30th. They were revised to June the 1st. However, as of May 29th, Canada Revenue Agency made another change to that. They basically didn't extend the deadline, but they said that they would not give any penalties if you filed and paid prior to or up to September the 1st. So for anybody who did miss that tax deadline, that's okay. You still have another couple of months to get it done. So that's that. The T2s, there's been a change to those too, and I'm going to read this because I don't think that was get updated. The corporate tax returns. So basically, any December, January, and February year ends, which would normally have been due June 30th, July, and August, are extended to September 1st. Obviously, for the February year ends, that's not a very large change. But as well, the November year ends, because they would have been due on May 31st. May 31st was a weekend, so the first business day that you could file is June 1st, when June 1st falls into the new updated deadline. So even November, you have till September the 1st. So if anybody's behind on that, no need to worry. I believe, and I can't tell you this 100%, but I believe the same issue is there, that as long as you pay the tax by September the 1st, yeah, you're good. Although that one you may not have to pay. The other forms that would go with it you do have to make those payments, but it's a little unclear as the T2. As with a lot of this stuff, actually something I should have probably mentioned earlier, we hope what we have in front of you today is up to date, but a lot of things are announced and the legislation doesn't come until later, and even the legislation has holes in it because they're doing it in rapid fashion. So there's lots of questions out there. One of the best places for you to go is the frequently asked questions section on the Canada website. They post a lot of good information in there and updates on things that need to be clarified. So that's a great source of information. So that's I think all I had on the tax deadline. So September 1st being the big day, and you should probably plan to have your tax paid by that date to avoid any. They can charge you late filing if you file after June 1st and you don't have the payment made. So I think that's what you need to take away from that slide. And that might be it for me for a while. Yeah, that's no changes there. Oh, I guess just to mention the CRA, we would like them to accept everything in electronic signatures. They're fighting on certain things over the last year or so when electronic signatures have become prominent. Through COVID, they actually backed up and allowed everything to be electronically signed, and they will accept that. And let's hope that once COVID is gone by, that they actually maintain that, because it is certainly a lot more convenient for everyone. So that's what I got to say on that. And I think Wanda's, yeah, no, it isn't all I got to say. Look at that, payroll and GST. Really, there's no changes on the payroll and the GST. The thing with the GST is there's no penalties as long as all the returns are filed by June 30th. So, so other than that, I think I'm going to pass you off to Wanda. Please do. Sean just poked up there, his head up, and please do ask your questions as we go through this. It breaks up sort of the monotony for you and us, and makes it a better, I think, the best we can do in these times for our presentation. So take it away, Wanda.
All righty. Hi, everyone. Like Greg said, feel free to throw any questions you might have up there. I am going to kind of run through these very top level, because these first ones have been kind of out for a couple of months now, and people are starting to get familiar with them. So I don't want to spend a lot of time on things that you already have exposure to, but if we get to the end and you feel like you have other questions, please throw them up and I will answer as best I can. So the first section we're going to talk about is the temporary wage subsidy. And the temporary wage subsidy was the initial 10% subsidy that was announced by Justin Trudeau back in March, when we started entering into this COVID isolation situation we've been in. And the temporary wage subsidy was a temporary 3-month measure put in place. He could get it in place quickly. And the way they set it up, it was to allow eligible employers to reduce their payroll remittances and their payroll deductions that they had to make to CRA with each payroll. And so to be eligible for the temporary wage subsidy, you need to employ 1 or more individuals in Canada. You have to have a CRA payroll program account on March 18th, and you have to pay salary, wages, bonuses, or other remuneration to an eligible employee. It's limited to Canadian-controlled private corporations that had a small business deduction limit, so it does limit who is eligible for it. You had to have had that small business deduction limit for your last taxation year that ended before March 18th, 2020. It must be an individual other than a trust, a partnership whose members are all eligible Canadian-controlled private corporations, individuals, partnerships, and registered charities, or for a nonprofit organization that is exempt from tax, or for a registered charity. And so the calculation of the subsidy, it's 10% of the gross remuneration paid on each payroll, but there is a maximum subsidy limit of $1,375 per employee to a maximum of $25,000 for the employer. The application was actually quite simple in that it was a reduction of the income tax component of your source deductions at the time of remittance for each payroll. And initially they indicated that if you failed to reduce the remittance, then it would be dealt with when T4s were filed, and it would be adjusted at that time. They've since come out and said that they will be putting out an application form in June, because not everyone realized that they had to take the 10% wage subsidy once the 75% CEWS came out. So they've now indicated that there will be an application form available in June that can be completed to request a refund of remittances earlier than when you file your T4s. So any questions on the temporary wage subsidy? And I'm gonna caution Sean that I can't see written questions the way I tried to change my screen, and that's when when Greg realized I was trying to confuse him. with my screen sharing. So if there is a question, Sean, I'm going to ask you to come on and let me know.
That I will for sure, no problem.
Thanks. So the Canada Emergency Wage Subsidy, I've heard it called the CEWS, I've heard it called the CEWS, I've heard it called everything under the sun. Anyway, it's the 75% wage subsidy that came out back in, I believe it was late March, early April. And so this subsidy is applicable on the first $1,129 of weekly remuneration up to $58,700 per year. At a maximum benefit of $847 a week, which is 75% of $1,129. Initially, it was set up for a 12-week period to run from March 15th to June 6th. And just last week, I believe it was, there was an extension announced to August 29th, 2020. So in order to be eligible for the Canada Employment or Emergency Wage Subsidy, you have to meet certain criteria, including having an eligible employee. You have to be an eligible entity. You have to meet a qualifying test for revenue during the qualifying period, and the remuneration paid has to be an eligible type of remuneration. And the legislation related to this is, as Greg indicated earlier, it's complex. It was done in a hurry, so there's, are some holes around things, but we've been doing our best to interpret them and get good information out to people. So who is eligible? Employees are eligible if during a week the individual was employed in Canada by an eligible entity, and it has to be other than someone who has not been remunerated for 14 consecutive days in the eligibility period, as that person would be eligible for the CERB. And so with respect to that, once this 75% wage subsidy was announced, and people realized that in order to be eligible, their staff had to have been remunerated for those, once they weren't employed for 14 days, they wouldn't meet the criteria for this. A lot of people immediately hired people back and paid them right back to March the 15th or 16th.
Wanda, we have a question.
Yeah.
Does this affect your employees' ability to draw a CERB if they are only working part-time?
For the I'm going to hold off and answer that question when we get to the CERB section. And the reason is because the parameters around the CERB have changed. And I just want to make sure before I answer that what I say is correct. So does the wage subsidy impact ability to get CERB? Okay, we'll revisit that question when we go through the CERB section, just because I want to make sure as I'm going through that what we say is correct. That's a good question, though. With the CEWS, the eligible entities include a lot: individuals, trusts, taxable corporations, NPOs, charities, labor and agriculture organizations, boards of trades, chambers of commerce, nonprofit corporations for SHRED, partnerships, of which 50% of the members must be eligible entities themselves, Indigenous government-owned corporations, registered Canadian amateur athletic associations, registered journalism organizations, and private colleges and schools. And so the initial qualifying periods, there were 3, and it was running on a 4-week basis, beginning with period 1, March 15th to the 11th. And in order to qualify for that period, you had to have a decrease in revenues of 15% or greater. For period 2 and onward, it was 30% or greater. And of course, now we're going to have period 4, 5, and I suspect possibly a 6 heading up to August 29th. And so when you're looking at the qualifying period, you can see that your revenue period that you're looking at The default prior reference period would be the same month of the year before. So for example, you would compare April 2020 revenues to April 2019 revenues. However, there is an alternative that you can compare it to the average of January and February 2020 revenues if you so choose. If you weren't in business on March 1st, 2019, you would have to use the January and February average revenues for your reference period because you wouldn't have that history for the previous 2019 revenues for that month. So revenue is determined on a standalone entity by entity basis. It may also include investment income, such as interest and dividends, and it's following normal accounting practices, excluding extraordinary items, either the CEWS or the temporary wage subsidy income, and it excludes amounts derived from non-arm's length persons or partnerships. Just to note, there are special rules if you are, involved with affiliated groups or joint ventures, or if non-arm's length revenue is more than 90% of the entity's revenue. When looking at whether your business qualifies or not, there are special elections that can be made. One is the reference period that you choose to use, and the other is whether to use an accrual or a cash basis for your accounting. But whatever choices you make with respect to those, you need to continue to use that choice for all of the remaining periods for the wage subsidy. And that's important to remember. If you haven't yet started this and you're making your decision, be sure to think about what's going to work best for you across the long run. With not-for-profit organizations, it is particularly important to look at those decisions because a lot of times not-for-profit organizations may charge membership fees, and those membership fees are typically taken into revenue monthly over the year, regardless of when the cash is actually corrected, and that would be following the accrual basis of accounting. And so on the accrual basis of accounting, the revenues for many not-for-profit organizations would be consistent for March, April, and May of 2020. But if you look at the cash basis and the number of people renewing memberships or paying their membership dues, it may be well within the 30% qualifying amounts in order to meet the test for revenue. Another thing to think about if you are thinking about a not-for-profit organization is whether or not fees may be purposely reduced. I know in some organizations where businesses were mandated to shut down, the membership fees being charged to through some of those organizations have been intentionally reduced because members don't have the additional money right now to pay those membership fees. And so that is a consideration to give in order to trigger the ability to qualify for that wage subsidy. With respect to eligibility, it's actually not too terrifically difficult. The important thing to remember is that the initial period, period one, the reduction that you had to have in revenue was only 15%. And that was because we kind of went into shutdown mode around the middle of the month. For all of the periods after that, the eligibility decrease is 30%. And so you're basically comparing your revenue earned in this example in March of 2020, which was $130,000. If they compared it to their March 2019 revenue, which was $170,000, they easily reach the required 15% reduction. If they were to choose the average of January and February, the average being $120,000, then they wouldn't meet the 15% reduction. But they do meet one of the methods, and so they would qualify. With the second business, their March 2020 revenue was $105,000. their January revenue was 100,000 and their February revenue was 140,000, the average being 120,000. And so they don't meet the decrease that way. And if they compared it to March 2019 revenue of 115,000, they don't meet the decrease in that method either. So they didn't qualify for period 1, but they may qualify for period 2 in April. Another important thing to remember is that if you meet the revenue test in a month, so if you met the revenue test in March, that means you automatically qualify for the April subsidy, regardless of your calculation. And so that was a little bit of leeway that was provided to employers as well. The calculation, it's very common with CRA. It's a bit of a it's a bit of a piece of work. It's actually not difficult. It's just a piece of work, difficult to file, or to follow. So the actual amount of the subsidy is a calculation that's determined based on the greater of 2 amounts. And the first amount is the least of 75% of the actual remuneration paid, or $847 for the week, or 0 if it's a non-arm's length employee. The second amount is the least of the eligible remuneration paid to the employee in respect of that week, 75% of the baseline remuneration, and $847. So with this, 75% of the baseline remuneration would be the remuneration paid up to March 15th. And then the first bullet is the actual remuneration paid during that week. So what this Part B calculation does is it allows, if it's an arm's length employee, for them to receive up to a 100% subsidy. Or if it's a non-arm's length employee, it makes sure that they are only eligible to receive 75% of what they were being paid before the COVID-19 shutdowns started to happen. So this is just emphasizing what the baseline remuneration is. I'm just gonna, these are pretty, they can be very time consuming, and I think if you are interested in the numbers, we can go into them and talk about them, but if you want to take a read through and have a question on them, I think it's probably better just to send me a quick email or give me a call and we can kind of run through it together. This calculation is just showing that an arm's length person is able to receive 75% of what they're paid during the effective period, whereas a non-arm's length person is limited to 75% of what they would have been paid up to March 15th, it's March 15th, regardless of what they're being paid during the effective period. Eligible remuneration includes salaries, wages, or commissions, but it doesn't include dividends, severance pay, stock option benefits, or remuneration paid to an employee who was without remuneration by the employer for 14 or more continuous days in the qualifying period. And this, of course, the eligible remuneration now is paid between March 15th and extended to August 29th. It was June 6th and now it's August 29th. There are a couple of sleeper provisions with this. You can't double up. So if an employee is employed by multiple businesses, they cannot have the subsidy claimed in respect of their wages by both businesses to the extent that it would be more than $847 per week. As long as it's under $847 per week, that would be okay. Another sleeper provision, and this was one that kind of caught some people, is that the fact that you are eligible for the temporary wage subsidy, the 10% subsidy, reduces the Canada Employment Wage Subsidy, regardless of whether or not you reduced your source deductions at the time of your payrolls coming through March, April, and May. And so that's how some people found out, oh, I should have claimed that 10% and I didn't. Now how can I get that money back? And so that's why they've come up with this application that will be released in the next few weeks. They say June, so I expect it will be in the next few weeks. They also announced a refund of payroll contributions for EI, CPP, and QPP for eligible employees each week, throughout which those employees are on leave with pay, and for those employees that the employer is eligible to claim the CEWS. For furloughed employees, the subsidy is increased by the employer portion of CPP and EI, and it must be part of normal remittances. For rehiring of employees, an eligible employee, if not without remuneration for 14 or more days in qualifying period. So this is why many employers rehired retroactive to March, but it's important to note that they had to pay the retroactive remuneration before applying for the Canada Employment Wage Subsidy for the qualifying period. The applications opened on the CRA My Business account on April 27th. They can also apply through the represent a client process that typically is in place with your accountant representative. Or there's also an online application form on the CRA website. A number of people were having difficulty getting access to their My Business account for various reasons, and so they created an online application form to take that problem out of the mix. You must maintain records demonstrating the reduction in revenues and the remuneration paid to employees. When you submit your application, you have to attest to the decline in revenue and that the conditions of the subsidy program have been met. And it should be noted that the minister may make information related to those who've received the CEWS public. Just like everything else with CRA and the government, there are compliance measures and penalty measures. So you will, if you apply for the CEWS and receive payment and you were not eligible, you will have to repay 100% of the CEWS when filing your return. If there is, if you've made it appear that your revenue is lower and meets the guideline, they do have a revenue suppression penalty of 25% of the excessive subsidy claim. And of course, it, like everything else, is covered by gross negligence penalties and third-party penalties as well. So we need to make sure when we're applying for it that we really do qualify. And that's it for the CEWS. I know I've still got that one question on my list here. Are there any other questions?
Oh, nothing at this time.
Okay, so I am going to mute and let Greg jump in for the commercial rent assistance, and we'll come back and follow up on that question as well.
All right. Thank you, Wanda. I didn't realize I was doing this part. Imagine that.
Well,
All right.
do it if you like, because I am familiar with this as well.
Yeah, I'm good.
Okay.
All right. All right. So this program for the commercial rent assistance is something that came out at the end of, the portals opened at the end of May, came out probably a month or so ago. It's basically splitting the rent between the government, the landlord, and the tenant. So the way the program works, can you bump us ahead there? There we go. Basically, in order to qualify, it's for 3 months, the April, May, June months. Obviously, the rent has to be less than 50 grand a month, and the tenant must have suffered a drop in revenue from the pre-COVID revenue recorded. Next slide. So a couple of things is the landlord, the property must be a mortgaged property, and the landlord must be part of the deal. But basically, the rent that was being paid, the landlord forgives or gives up or doesn't charge 25% of the original rent. The tenant pays only 25% of the original rent. And then the federal and provincial governments cover the 50% portion. I think that 50% portion is that a grant? Or is that a loan and you have to file a loan for now and then you have to meet certain criteria for it to be forgiven? Do you remember?
I believe it's a grant.
Just a straight grant. So,
Yeah.
okay. So that's a unique little thing there. I don't know. Wanda, have you seen a lot of people using that? I know we have some clients here that looked at it, but I'm not sure there was that big of a take up on it.
Most of my clients didn't qualify on either end. And in some cases, some of it has changed a little bit and they're just starting to try to maybe come in under it.
Yeah.
But initially it was very limited. And so the application didn't benefit a lot of people, but I see a couple clients now who are starting to come within the parameters of it and may be able to utilize it.
Yeah. So very typical. They'll put something out and then make the changes.
Yeah.
Because it wasn't very successful to start with. So, all right, the CERB. Well, this is the one you had the question on.
Yeah.
So, do you want to do this section? I know very little about the CERB.
Sure.
Yeah.
I've been learning more about the CERB. So the Canada Emergency Response Benefit. So with this, this was a program that was put in place to provide temporary support, income support to workers who lost their work because of COVID or had to stop working because of COVID. And so it was put out very, very quickly to get money in the hands of individuals who had bills to pay, rent to pay, and food needed to feed themselves. And so it's paid in 4-week increments, so for a 4-week period, at a rate of $2,000 per month with a maximum of 16 weeks of benefits. And it's available from March 15th to October 3rd, 2020. With this benefit, you had to be at least 15 years old. You had to have stopped working because of reasons related to COVID-19, or be eligible for employment insurance, either regular benefits or sickness benefits, and have exhausted those regular benefits or sickness benefits between December 29th and October 3rd, 2020. In order to qualify, you had to have had employment or self-employment income of at least $5,000 in 2019 or in the 12 months leading up to the date of your application. And you must not have quit your job voluntarily. And so when you submit your claim, your first claim, you cannot have earned more than $1,000 in employment or self-employment income for 14 or more consecutive days within the 4-week benefit period of your claim. And so I think that's the part, and I opened up the website to be sure when looking at whether the CEWS impacts the ability to get the CERB. In order to do your first application for the CERB, you cannot have earned more than $1,000 in employment income for 14 or more consecutive days within the 4-week benefit period of your claim. And it does say people who have stopped working. And so I don't believe you can get the CEWS for people who have filed for the CERB because they had stopped working, or there may be some fine lines in there that maybe you can get around. But my initial thought is you probably can't do both. Do you have any thoughts on that, Greg?
I think what I heard somewhere was that come T4 time, if somebody was claiming the CERB and was working and got and the employer got CEWS, it'll be reported on the T4 and the CERB will have to be repaid.
Yeah, yeah.
I think that's how this is going to work.
Play
I
out.
don't know that I've read that anywhere, but I believe that's what's anticipated, that in the T4 reporting period, the employer will report the amount of CEWS and the amount of earnings claimed.
Yeah.
And then and then the calculation will go through and the CERB will have to be repaid at the time.
Wanda and Greg, we have two questions.
Okay.
The first one, the CERB that can be applied this week, is this payment to replace lost income for the month of May?
The CERB that can be applied this week coming up, June 6th or what, I think it's June 6th.
Yeah, I believe so.
Yeah, it's for the benefit period starting June 6th. I don't have my calendar open here. It would be the benefit period from June 6th probably to July 4th, because they actually pay it out in advance of the 4-week. It's at the beginning of the 4-week period. You're getting the money front end loaded for the month, if you will.
And second question, what if they stopped working for 14 days and then were hired back?
So with the CEWS, they had to, if I slip back in those slides, hang on, I have to find my mouse again. If I slip back in these slides, for the CEWS, you have to be an eligible employee, if not without remuneration, for 14 or more days in the qualifying period. So if they didn't work for you for 14 days, then they would not qualify for funding under the CEWS. And in order to get the CERB, you have to have stopped working because of COVID-19. Initially, it was 14 days. I'm actually on the Canada.ca website right now, and it doesn't actually specifically say 14 days now. What it says is you cannot have earned more than $1,000 in employment income for 14 or more consecutive days within the 4-week period of your claim. So it's a little gray there.
So are they allowing you to earn $1,000 on top of your 2,000?
Yeah.
So to the answer to that first question then would be, the part-time worker probably would be okay if they were making less than $1,000.
I think the trick is this is, and I think perhaps what I'll do is run it by Am. There's a lady who's been looking at this kind of nationally for us. Perhaps I'll run it by her. I think the trick is that initially, in order to get the CERB, you had to be without work for 14 days, right? But yet, in order to get the CEWS, you have to have worked for the employer all of that time.
Yeah.
Right?
Yeah.
So just to clarify, so if another question here, so if I'm going to receive salary payments for June, I should not apply for CERB on June?
My answer to that would be it depends. If you are going to receive salary in June, but it's going to be less than $1,000, then you would be eligible to apply for the CERB for June. You just can't earn more than $1,000 during that 4-week claim period. Does that make sense?
Which will confirm, or do we know that for sure?
So just I'm keeping track of all the questions anyways.
Mm-hmm.
So
Okay.
we can go back and revisit those at a later date if we want to send follow-up material to the individuals that are asking the questions.
And we can do that for sure. Yeah.
Because we certainly know that one of the problems for a lot of in the ag and the like the fish processing industries that are paying, looking for people to work, they're having a hard time getting them to work because the amounts that they were going to be paid at minimum wage or whatever the case may be would be less than what they would get as the CERB. So it's really dampening that market for employers, for employees for them. The downside of that or perhaps what people are forgetting on the employee side is that the CERB is taxable. So, if you're making money the rest of the year, plus you get your CERB in there with no tax withholdings, you're probably going to end up with a tax liability. So the $2,000 take home that you're getting at CERB now is not measuring apples and oranges with the money you would have been getting on a payroll with taxes and EI and CPP withheld. So there's going to be, I think, a lot of misunderstanding around that, and there's going to be some confusion next April.
Yeah.
Yeah.
Yes, I think there's going to be a lot of confusion next April, even with people who have applied and weren't really eligible in the first place and have received this money. And yeah.
Right. Either you're going to pay tax on it or you're going to pay it all back, or some piece of it. So, yeah, there's going to be some problems there. I can see it coming.
Yeah. So that's it for the CERB. We will keep those questions though and follow up on them just to confirm the answers. And we are on to stimulus credit and other loan programs that are available.
Awesome. So we'll blow through these for the most part, unless there are some questions on them. Can I get, yeah, there we go. So the first one's done and gone by, so we won't even look at that one. There's the next one is on there twice. It must be really important. For all government loans, there's a deferral program. So that's if you have loans from Farm Loan Board or any of the other quasi-governmental loans, though there's deferral available there to defer to the principal and interest. There is a small business loan guarantee. So it talks about what's excluded there. So your real estate, your bars and restaurants and taverns. There's financing available for $500,000 there for working capital. Also allows you to get the loan and not start to repay it until after the end of June. And for those who may not qualify, there's a government guarantee available. It's for those that are familiar with the small business loans program, it's just sort of an extension to that, and it's through your local credit union. So if there's something there that somebody would like to go and check out, I would suggest talking to your local credit union. The next slide. So these are Nova Scotia specific. Small businesses that do not qualify for the Canada Emergency Business Account, which we're going to talk about in a minute, and have a decline in revenue of 30%. There's a guaranteed loan, so there's another government guaranteed loan with a grant of up to $1,500. We don't know a whole lot about this one. It is relatively new. I think it was just announced within the week. So legislation has not been given for that yet. So the devil is in the detail. So we'll see what comes out in that. The Worker Emergency Bridge Fund, I didn't even know about this one. Funded through the Canadian Red Cross, and it's for those people that got laid off, don't qualify for EI, but have applied for the CERB. There's a one-time payment to get you across there for $1,000 as an individual. So, moving right along, the small business, I can't find my next slide. Here we go. Those approved for the Small Business Impact Grant are eligible and didn't apply. I don't think I saw this one. Small independent gas retailers with three or fewer retail outlets paying the small business rate of tax. So you have to be a small business, decline in revenue of 30%, and you may be eligible for a $5,000 one-time grant from the province, and as independent Nova Scotia small retailers. So this is something to help you provide some funding for reopening, which hopefully most of the people are are getting ready to open tomorrow, as well as any dentists out there. Some money available there to to get you ready for all those things you have to, all the plexiglass you have to buy and things of that nature.
What they
What's
did,
next?
what they
Sorry,
did,
go ahead.
what they did with this one is they took the group that were originally eligible for the small business impact grant, which were basically just those businesses who were forced to close. And then they expanded it to some of the areas that they specifically excluded at that time, which included locally owned retail businesses, locally owned retail gas dealers, and dental offices, all who you know, had major impacts to their businesses and definitely have expenses in order to reopen, you know, and be within the requirements that are in place now.
So that should be a relatively easy. I don't know how fast, and I don't know how you apply for that one. I assume the application's already done.
The website is right there, and it's a rather quick. The application form will be put up there, and I think it opens Monday.
Okay, awesome. So there's some other loan programs that are done through the BDC, but these are loans. You can get up to $2 million, a working capital loan administered through BDC. There's some other loans available through BDC or the Economic Development Corporation. These are all administered through those banks by using BDC and EDC. If there's some more information on that people need on those, I suggest you would talk to your banker or go to BDC directly. That's you went by the Canada Emergency Business account there. The interest-free loan of $40,000, $10,000 possibly forgiven so if you meet certain criteria. If you repay the loan prior to December 31st, that happens, and there's no interest on this loan. So this hasn't got a due date, correct? This is still operational. This is through your bank. And so this is this is probably the one I've seen, other than the wage subsidies, the one that I've seen used the most. It's fairly easy. You can do it online through your bank, your bank or whatever bank you're with, online through them. And it's a pretty easy thing to do. So it is 40, it is a loan. You got to pay back at least 30 of it. But it's an interest-free loan for a while. And as long as you pay her back by the end of December 31st, 2022, they're willing to write off the $10,000 of it. So that's a pretty good little program for small business. There's some grants available for businesses that relate to the Chamber of Commerce. So those are closing on June 12th, those applications. So that's not that far away. So if there's some people that are willing to look for that, then you should get on that one. So the final thing we will talk about is tax planning during the economic slowdown. Some of these items are tax planning during any time, and some of them are specific to an economic slowdown. And we'll just briefly go through a couple of these things, some ideas. The top one there they have is owner remuneration and strategy. So whether you pay yourself salary versus dividends, the biggest issue with those are if you're in a tight cash flow, you may want to look at dividends. You won't save a whole lot of tax, but you can plan around your Canada pension. If you wanted to take a year off of paying Canada pension for an owner managed business that maxes out their Canada pensionable earnings, it's $5,000 a person to that owner. So it's a way to provide some small cash flow for a 1 year, and it shouldn't affect your draw and your pension down the road, because it's a complex calculation that takes out the highs and the lows and averages out the rest. So that's one of the things, but you should always be looking at those strategies anyway. There are downsides to dividends, obviously. No RSP contribution room generated. And as we already talked about, Canada pension. So that's always something you should look at, but now it can be looked at to provide some short-term funding. Payment of tax-free dividend capital accounts. What a capital dividend account is a corporation has a capital gain. 50% of that capital gain is non-taxable. So in order to get it out of the company non-taxable, it goes into what's called a capital dividend account, and you apply to pay a capital dividend out to yourself personally. The reason we're saying you may want to consider doing this is with all the money that the government is providing in different programs and support, well, that's going to have to come back from somewhere. And chances are this is one of the things that they may look at limiting your use of a capital dividend account. So in other words, instead of getting that 50% tax-free out, there's a possibility that in the next budget, in order to generate some taxes, that it would be taxed just like a regular dividend coming out. So we're advising everybody to pay them out if they have them at this point, to get them out of there. Another issue is, as we've seen, the markets have sort of come down. So one of the things you could do, if you've had some capital gains in the past 3 years, now would be a good time if you wanted to trigger some losses, go back and recover that tax you paid on those capital gains. So that's, I mean, we are in a loss position there. So whether you want to realize them or not is an investment decision. But if you decide that is the route you want to go, you may want to consider doing that to be able to carry those losses back to you can go back 3 and forward 20. But it's the going back and recovering some tax money and some cash that is the interesting point there. The next point deals with the same thing. Basically, it's saying, okay, so I owned a bank stock of a certain bank and it went down, and I'm going to sell it and realize a loss, carry it back, get some tax back. But I really kind of like that bank stock, so I want to buy it back. There is a stop loss rule to keep you from doing that. You have to wait a 30-day period before you buy that same share back. But one of the ways around it is, as they say here, if you own the RBC and you sold it at a loss, you could buy a different financial institution, and that's okay. You just can't buy the RBC stock back for 30 days. So that's just something what happens is they deny the loss if that is done. Transfer of property from a corporation to an individual shareholder. So if you are sitting on some corporations and there's some properties in those corporations that you know at some point in time you have to get out. Sometimes, oddly enough, a cottage property might be found inside a corporation, or a piece of land that you won't want to sell with your corporation when you eventually dispose of it, or there's a number of reasons why you may want to get an asset out of a company. Well, typically you pay tax on that, and that hasn't changed, but the fair market value of a lot of these assets have dropped dramatically during this COVID-19. So it may be the best time to trigger those taxes to get that asset out of the company. Asset protection planning, well, that's something you should always be considering. The biggest issue there is, moving any kind of investment cash asset out of an operating company and sideways into a holding company gives you that asset protection generally. That is something that if it wasn't done and COVID-19 has caused the worst kind of scenario, it's too late for that now, but I guess it's on the list to say, you never know what's going to happen, so you can't do it after the fact. The estate freeze and the thaw and the refreeze. So what an estate freeze is it's when you as your owner feel that you are going to pay enough tax on your death, on your business, and you want the rest of it to pass on to the next generation. Not necessarily the ownership, but certainly that you want the gains, the future growth to go to the next generation. So you freeze the value. So you exchange your common shares for a preferred share, typically, that has a stated value of the business. And then if that value, the business goes up in value on your passing, the gain from that point on goes to the next generation for them to do it, capture tax liability. Again, the reason this is on the list is because currently a lot of businesses' fair market values will have dropped for a number of reasons. There are not a lot of people out there looking to buy businesses right now. Financing's a little tighter, and sales could be down. So it's a good time to pull that transaction if that's something that is of interest to you. The thaw refreeze means you've already done it, but perhaps the value that are on your preferred shares now is higher than the actual value of the business because of the downturn in the economy. So you may want to consider what we call thawing and refreezing. So that's reissuing new preferred shares with the new value, such that the growth from that point on goes to the next generation, and you're not in the hole already from when you did the freeze. So that was a lot of information in like 2 minutes. I think that's the last slide, is it, Wanda? Yeah. Oh wow, look at that guy on the left.
So, guys, another question here.
Yes.
And Wanda, this is directed towards you.
Good.
Sorry. If an employee that has a sore throat or needs to quarantine for 14 days does not actually have COVID and will return after 14 days, can they apply for CERB again? So the scenario is they would have had a sore throat, quarantined, but does not actually have COVID, and then returns to work after 14 days. Can they apply again for CERB?
Can they apply? I guess what's tricking me is can they apply again for CERB? So if they went off for 14 days and returned to work and then went off again later, or I think it's the again that's tricking me.
So I think they would have applied initially when they first became when they first went on, right? And then didn't actually have COVID, came back to work and returned to work after 14 days and then applied again. Could they apply again? Sorry.
That's a good question that I'm going to look at that perhaps with Anne just to check. My initial instinct based on what the rules say is that I would think you should be able to, because each month when you apply for it, it's a new claim. It's just that the only differences are there's the first claim and then there's subsequent claims. And so if you meet the parameters on the subsequent claim, you should be able to apply, but we'll double check that just to be sure. That's a good question. I like that question.
The timing would affect too, if it's 2 weeks, if it's 2 weeks out of a month, then they're getting paid for 2 weeks, which will probably kick them out. They'll make more money than the CERB would allow.
And that's possible. Yeah. It depends on what the timing would fall as.
Yeah. There's never an easy answer for anything.
There really isn't with these.
But we will follow that one up and get you a definitive answer. Matter of fact, probably the best for that user, if you wanted to call Wanda and give her a few more details, or email Wanda and give her a few more details of dates, we can get you a better answer.
Yeah.
So.
Any other questions? Well, I think that's it then, Tracy, if there's no other questions.
It's 2 o'clock too. Look at that. It's almost finished on time.
We were a little late starting. That was great information, you guys. Thank you so much. And what we can do, you can always share the information, answer those questions, and I can flip it out to everyone that attended today. And so everyone has the answers to those questions. But that was fabulous. I thank you so much. This session has been recorded, and we'll send the recording out to the participants that have attended today, but we'll also make it available on our website. So anyone can be directed to our website and see the recording, the playback of this webinar.
As a PS, something I had written down to make mention, I'm not sure if there's anybody in the ag industries on the call, but agri-stability is the key component for helping finance through any kind of COVID problems in the ag side. So take a look at that. Anybody that's in ag out there, there's a recent, as of 1:04 p.m. release from Nova Scotia Federation of Agriculture about some provincial programs as well around the agriculture industry and using the agri-stability to do that in term payments. So if there is any ag people out there, Nova Scotia Federation of Agriculture website, we actually did a webinar last night, which I think was taped as well on agri-stability, and it's probably there. So I wanted to mention that because that's not in the slides anywhere.
That would be a good one to actually share for our membership, because there, of course, we have a lot of members who are in that industry, so that would be good information.
Yeah, so you could reach out to them. I know I think it's probably public on their website. I don't know. We just did it for them last night. But anybody who's in ag would be part of the federation. So
I can check on that, Tracy, too.
Oh, that would be great. That would be great, Sean.
I think what I'll do is I have an email drafted that you can send to members as well too, with some information on our Business Advice Center, as well as some pre-recorded material around the presentation.
Perfect.
So you can, and that's all public, so you can send that to members as well too. As well, I'll give you Greg and Wanda's contact information if they say it's okay to share as well.
Just kidding.
Yeah, that's great. Well, thank you so much, Wanda, Greg, Sean. This has been great information to share and get out there. So, yeah.
You're welcome. Very welcome.
Right. Yep. Thank
it's
you.
Good to get as much information out as we can to people to help them get through this.
Yeah, there's a lot to go through and decipher through. So
it sure is.
Yeah, no question. And it changes every day.
Yes. All right. Well, thank you for those attending today. I hope, and I'm sure you found this session really with a lot of information, good information for you to move forward with your business.
All right.
Okay, bye-bye, everyone.
Have a good day.
Bye.